From some huge Dogecoin and crypto updates coming from Cathie Wood to all the latest data and updates, I'm going to talk about some important things in this video. So just recently, renowned money manager Cathie Wood has stated that she thinks that Bitcoin and cryptos have just begun, and several companies are fighting for digital wallet primacy. Wood said in an interview on CNBC that institutions are just starting to catch up to individuals in using Bitcoin. She also called Bitcoin a hedge against inflation. Moreover, Cathie Wood said that a big issue is who will win in creating the biggest Bitcoin wallet. She said that Robinhood Markets, financial services firm Block, and Coinbase all are in the running. And she revealed that the first go-to for institutions is Coinbase, as it has the most robust platform, the most liquidity. Now the most important thing to note here is that Cathie Wood is sticking to her January prediction that Bitcoin will crack $1 million by 2030. She believes that Bitcoin has a host of use cases, including as an insurance policy for people of means so that their wealth can't be confiscated. Meanwhile, she recently expressed opposition to much more in the way of interest rate increases from the Federal Reserve. She said that the yield curve has inverted, suggesting that the Fed is going to raise interest rates as growth or inflation surprises on the low side of expectations, and she thinks that this will be a mistake. So it appears that she is also apprehensive of the recent policies by the Fed. And as per another recent update, Cathie Wood's firm ARK Invest has sold off all of its holdings in PayPal, and the firm is now leaning toward Jack Dorsey's firm Block due to its singular focus on Bitcoin. Discussing her company's decision in an interview with CNBC, Wood pointed to Cash App's organic growth as opposed to the top-down approach taken by PayPal's Venmo. She said that Venmo is accommodating Bitcoin as well, but it's more of a follower of Cash App, and so they tend to put their bets on who they believe will be the winners. The ARK Invest chief added that the firm chose Block over PayPal while consolidating its portfolios during a risk-off period for innovation and had to make decisions in favor of the highest conviction names. Cathie Wood also said that Block's singular focus on Bitcoin is critical here since Bitcoin's Lightning Network has been in test mode for years but is more robust now and is ready for prime time. Wood went on to suggest that thanks to the Lightning Network coming to Cash App's U.S. army of users, both the number of channels and the number of developers contributing to the platform are also going to explode. Meanwhile, Wood also believes that cryptos were initially created to sidestep old institutions and banks, but they may finally be feeling themselves get disrupted. Wood said that the amount of interest investors are showing in DeFi, or decentralized finance, applications could threaten the traditional banking world. There's been a share shift when it comes to loans in DeFi. Cathie Wood believes that banks have a big problem. They're losing talent to crypto, so they're having to raise wages to attract talent, and they're losing business to DeFi. She further said that political institutions are another part of the establishment that is starting to respond to crypto in a more positive way. Wood said that we are now seeing a 180-degree difference today than it was a year ago. She noted the shift in stance from U.S. Treasury Secretary Janet Yellen, who had previously expressed concern on cryptos. So this is a good thing, and the most important thing to note here is that Cathie Wood is now showing more and more interest in cryptos and crypto-related investments. In addition to this, we also know that Cathie Wood views Bitcoin as a disruptive innovation in line with corporate giants like Amazon, Apple, and Tesla. She believes that during the early years of Amazon and Apple, people were saying that they were going bankrupt. However, both these companies have now become one of the most successful tech firms in history. And then coming to Bitcoin, she highlighted how her investment management firm had to reckon with doubters when they first bought into Bitcoin. She revealed that when they first gained exposure to Bitcoin in 2015, many observers basically dismissed their investment. And she said that Bitcoin at that time was at a $6 billion market cap. Today, it's nearly $1 trillion. In addition, we also know that she has remained very bullish on Bitcoin even when it has been struggling to move to the upside during the start of this year. We can see here that her firm has previously made a prediction that Bitcoin's price could exceed $1 million by 2030. They believe that this is going to happen because Bitcoin's global adoption and usage are still only in its early days, and the institutional ownership of Bitcoin will broaden in the future. Now, all of this is also very important for Dogecoin and its holders. So if we go back to September 2021, Cathie Wood revealed that ARK Invest's future exposure to cryptos would be around 60% Bitcoin and 40% Ethereum. This is because their interest has grown in Ethereum owing to its upcoming proof-of-work to proof-of-stake transition. The important thing to note here is that Dogecoin is also going to transition from a proof-of-work protocol to the proof-of-stake protocol. So the point is that since ARK Invest is investing in ETH as a result of the proof-of-stake shift, it is quite likely that the firm will also invest in Doge. All in all, Cathie Wood's interest in cryptos and her bullish forecasts bode well for Bitcoin and the broader market. This is because we already know she is one of the top money managers and has regularly displayed the most enticing and, so far, accurate investing approaches. As a result, her growing interest in cryptos is expected to inspire a huge number of institutional investors to hop on the crypto bandwagon. And with that being said, let's come to Dogecoin's current price movement. So the current Dogecoin outlook is bearish as it has witnessed a significant sell-off along with the overall market during the last 48 hours. We can see here that it is now trading below the 14 cents support level after having a good run during the last 2 weeks. However, there are still some positive signs that we should not ignore. So we can see here that even after this dip, Doge is still moving above its 50-day simple moving average, which is a very positive sign. Meanwhile, its daily RSI value is now sitting around 50 points, which means that the recent sell-off is now cooling down and we might not see another sell-off from here. So let's see how things transpire in the coming days and how Dogecoin trades from here. And now, let's come to Bitcoin for a minute. So Bitcoin is currently moving around the 40K price level after the recent crash where it even went near the 39K level. It appears that Bitcoin risks further decline to 37K as there are chances of some panic selling in the coming days. However, if buyers attempt to defend this crucial support of 40K from here, things can get better for Bitcoin and it may avoid another sell-off. Meanwhile, on-chain data shows that Bitcoin miner outflows have been elevated recently, suggesting miners were involved in the recent sell-off. As per a CryptoQuant post, Bitcoin miners seem to have been one of the sellers behind the price drop. The relevant indicator here is the miner outflow, which measures the total amount of Bitcoin exiting wallets of all miners. When the value of this metric spikes up, it means miners are moving a large number of coins out of their wallets right now. Such a trend can be bearish for the price of the crypto as it may be a sign of dumping from these original whales. On the other hand, BitMEX co-founder Arthur Hayes believes that another crypto carnage may just be around the corner. Hayes stated that cryptos move in tandem with the debt-based, unfree risk asset markets such as global developed market equities. He asserted that the market is standing at the precipice of a calamitous outcome which could potentially trigger a drop down to 30K for Bitcoin and 2.5K for Ethereum by June. Hayes said that this might become the case because the market perceives crypto and big tech in the same cesspool. Despite this warning, there are some on-chain metrics that have a positive approach for Bitcoin. The first and the most extensively used on-chain metric for Bitcoin price is the 365-day market value to realized value mode. Santiment says a value below minus 10% points towards short-term holders who are selling at a loss, and here long-term holders usually tend to accumulate. Hence, the value below this level is considered an opportunity zone. At present, the indicator is fluttering around the zero line, indicating investors are not in the profitable zone. Hence, there is still a chance for Bitcoin to see an upswing before sell-off emerges. The next indicator to focus on is the supply distribution of whales that hold Bitcoin. Since June 2021, investors who hold between 1K to 10K Bitcoin have accumulated. Hence, the number of former market participants has surged, accounting for a 6.5% increase. This spike in holders often indicates that institutions are optimistic and are hoping for an uptrend in Bitcoin's price. And now coming to Ethereum, we are seeing that it is now trading around the 3K market. Overall, the current trend for Ethereum is looking pretty bearish. However, we know that the Ethereum 2 transition is pretty much on the cards, and since investors are waiting for this to happen, we can expect Ethereum to trend positively in the long term. And now coming back to Dogecoin, we are seeing that Cathie Wood has come up with some bullish updates for it and other cryptos. So we can expect Doge to come out of this consolidation and move to the upside in the near future. In any case, what are your thoughts on this? Let me know in the comments section below.